Good evening, everybody. It's Jeff Scott. It is November 1st, 2015. It is approximately 8:30 p.m. and welcome to this week's Top-Down Review. Sorry I've been gone the last couple of weeks. I've been doing this weekly for God knows how long. I don't charge for this, and as I become more busy at work and with various meetings and programs that I speak at, I may spread out a little bit more than I have over the last couple of years, at least the duration or the time that I do these. Real quick check of the futures, which I always like to do in the beginning when I do these things in the evening. And I know they were down a little bit. You know, I think there's some risk in the market short term from news. Right now, the NASDAQ's down about 10, the S&P 6, the Dow 37. I think some of the risk is related to what's going on with Russia, Syria, and ISIS. As you're probably aware, a Russian plane went down in the Sinai. ISIS took responsibility. I think a lot of people blew it off when that happened. And then subsequent to that, today they were talking about how it blew up into pieces in the air, which could be an oil gas explosion, but you also wonder if it wasn't a bomb or a missile. So that may heat up the Middle East, and that could cause some havoc with oil prices going up, probably some flight to the dollar, and strong dollar. I don't think our futures are really reflecting it at this point, but it's something that you always wonder what's going to trip up the market, and sometimes it's things you just didn't see happening. So I called this week, just think about the last couple of weeks in October to remember. It was a great month for the bulls. And, we had our big flush in the market August 24th. We had a retest a few weeks later, and then the market started its move up to the point where today, of the major moving averages, the only one that is not above its 200-day moving average is the Russell 2000. As always, for education purposes only, I'm a doctor, not a broker. I am not affiliated with any software vendor, teacher, trader, etc. I have paid for everything that I used. I have some great friends in the industry, but I've paid for their software as well. And trading involves risk, and you alone are solely responsible for any decisions that you make. I sort of thinned this down just to make it clear. I schooled in CanSlim. The training and education is taught by O'Neill and his disciples. Taken to a different level by Morales and Katcher, highly recommend their books. And then automated in HGSI and improved upon by Woodward and Brown. That really was helpful for me to figure out when to trade and what to trade, but there was always when to make when to do the trade, money management, etc. And I've learned so much from this guy over here, John Person. Great books as well, highly recommend them. John shares a lot of the things that I share from a market, industry, seasonality, top-down perspective. He's been trading for a long time. He can trade almost anything in any time frame, but as I watch him often, I think he, like myself, does look at not just day trades, but looks at swing trades and other trades of longer duration. And then Van Tharp, who is sort of the god of position sizing and money management, but it's a big book to read. I have a lot of programs. I usually try and hide them when I do this. I use TradeStation and Thinkorswim for real-time trading. I can do a lot more with TradeStation, and I'm happier to put my orders in Thinkorswim. That is when the platforms are working. Genesis is by far the most stable, and I believe the best of the trading platforms or charting platforms. It is expensive, requires separate data feeds, and is not for everyone. I use John Person's lifetime set on both TradeStation and Genesis. For my analysis, though, I use mostly HGSI and EdgeRater, which we'll be playing with tonight. I do follow seasonality. I'll mention something about that tonight, and a number of my favorite websites. As always, I like to look at the sector review, which is from the John Person lifetime package templates. And what really stood out to me this weekend was on Friday how weak financials were. And I'm not just talking the XLF, but the KRE, so the financials, regional banks, the BKE insurers, the BXD broker-dealers, and credit cards were where the weakness was. Now, it's interesting, on Friday, there was some weakness in technology. But if you look at over the last week or two, technology's been extremely strong, or has been strong, led by some of the software companies and computer storage. Staples were weak on Friday, and healthcare, after having a nice run, was weak as well. Friday was a down day, but you ended the month down, but on Friday, but it was a great month nonetheless. Talking about the great month, you could see that in the middle of, let's look at this real time. It's hard to see that. This is just pictures of the various indexes. So the date of the, I just wanted to see when we came, October 2nd. So what you can see on this picture here, and let's bring it back into slide mode, is that this was the August 24th whoosh of the market. This was the October 2nd. And from the point of that low, the market just moved higher from the point of the October 2nd low right here. And as you could see, the E-minis got above the 200. Wouldn't surprise me to see them retest at the beginning of the week. The NQs are really leading the market forward. Look at Amazon, Apple, Netflix, Google, Priceline. The YMs, looks like they might be retesting. And the only thing that hasn't broken above the 200, as I mentioned before, the TFs or the Russell futures. Looking down here, the VIX remains down below its 200-day moving average, and the dollar has bumped up above its 200-day moving average. It'll be interesting to see with potential escalation in the Middle East, will that lead to, again, a flight to safety. I like to look at Genesis because of how nicely it puts together. These are daily, 60 minutes daily and weekly, E-minis, NQs, TFs, NYSE, and YMs, and how I can look at, let's look at the dailies, and you can see how both the advanced decliner limited to the stocks in that index and OBV are both above its moving averages. And what's really happened in the market that makes me want to believe that it's different this time and we're actually going back up to new highs has been the improvement in OBV and advanced decline, although on Friday they pulled back some, and we actually on Genesis did get a sell signal on Friday on the TF, which is the weakest of the indexes right now. Rates continue to be low. In fact, the KRE, which has a big position, the Russell, was up early in the week. But when the Fed elected to continue the soft pedal interest story and defer, the KRE dropped as interest rates did not go up. They actually increased a little bit at the end of the week, but overall interest rates were down on the week. And as long as rates are low, it should favor REITs, MLPs, which look strong, utilities, dividend payers, maybe even home builders. And banks and insurers, like they were on Friday, may have a tough time until there's a hint that rates are going up. The A and D lines, which both on the daily on the right and the weekly on the left, have both turned up, which is great to see if we're going to see this market turn around. And then if you look at the number of stocks above the 200-day moving average and the number above the 40-day moving average, green representing the percent, have both gone back up. On the 40-day, which will happen quicker, we're getting back up towards a much higher norm level. On the 200-day, the number of stocks above the 200, we've broken above the trend line, and hopefully we'll see that continue to go up as the market recovers. Canaries in the coal mine, I like to follow, as taught to us by Ian Woodward, follow some of those large stocks whose may lead the stock market up or down. We look at the canaries: Facebook, Netflix, Google, Apple, Amazon, Priceline, LinkedIn, and Tesla. Not all of them are working in concert, although LinkedIn rather did have some good earnings. But you could see we're at all-time highs. I drew the line up here at the close on Friday. The good news is we're at all-time highs. The bad news is we have a long-legged doji bar, and it wouldn't surprise me to see us pause a little bit before we go higher. It's had a huge run, but that, I think, bodes well for the market. The point of using a surrogate index like this is to get an idea or predict when the market is going to turn down by looking at some of the market leaders. Market thoughts, it was another positive week in the markets, although less so than the past couple. Growth continues to underperform. OBV and AD, especially small cap growth. The OD and AD lines lead the markets higher. Participation improves. Strength, I did see strength on my weekend review in energy and certain technology stocks. And feeling short-term overbought, as I said on several of the index charts, it wouldn't surprise me to see us retest. Longer term still looks like 2011. What happened in 2011 was a double bottom and a gradual return to new highs, although I don't believe we saw new highs until February or March. So we may have a ways to go, but we did see back in 2011, after the lows, a steady move to the upside, and that kind of feels like where we are right now. Longer term, are we still in a topping mode? We've been in a bull market for 6 years, and we have the impressive duration of the bull balanced by a world of quantitative easing, and perhaps the market can run. Other things of point, year 3 or year 7 in a presidential two-term cycle are almost never down years, and we are in that year right now. Next year may be a little bit tougher. It has less positive from a cycle perspective, and it wouldn't surprise me to see a lot of entropy or volatility come into the market next year as the election gets closer. I think short term, my biggest concern, unrelated to anything I've said except for the beginning comments, is what's the next brick to fall? I don't mean brick country that I'm not thinking about, and I think that I'm concerned about the escalation in the Middle East with ISIS and Russia, and this could be a reason for Russia to escalate. Just not trying to be political, but if that happens, I think that will put some pressure, at least short term, on the market. Remember, stock patterns are cyclical. For much of the middle of this year, we lived at the top, where every time we thought we'd take a leg down, we took a move up, sort of like a Darvas box, where we just had a box from the top, the bottom, kind of at the bottom of the red circle, and the market just went back and forth there. August 24th and perhaps a couple of weeks prior to that really felt like we had the whoosh in the market. And now the question to me is, are we done falling and slowly working our way back up? And is this a time to go very long? Or do we have more downside to come? Time will tell. I'm going to play the market I get, the market I see, and not the market I think we should get. Based upon where I think we are in the market, as I've talked about before, I employ different strategies in types of trades I take, and the more I think that we're starting a sustainable uptrend, the bigger position sizes you'll see me take. But right now I'm still a little bit confused / nervous. News, first week of November, which means we've got the monthly unemployment data. So there's a big news week culminating on November 6th with unemployment. Some energy stuff, construction, factory orders, number of market moving pieces here. Here's the reference for Levitt Brothers. And my goodness, is this a big, I mean big week for earnings. Now, as usual, if you do well in earnings, you've been getting rewards. Those that have missed have been punished, and I don't think that's going to change. Tonight's agenda, we'll go through my usual market review, and then I'll come back to the chart of the week. I did not take the last chart of the week 2 weeks ago, ABG, because after I loaded my thing up on the web, I realized that it was the same day that earnings came out, or within a day of when earnings came out. And I think that's very important. The stock blew up on earnings, although long term I still think the stock has a great opportunity. And you have to know when earnings are before you take a trade, and that was a cardinal sin, except I didn't take the trade once I realized that. All right, let's take a quick look at my market recap from last week in EdgeRater and other of my tools. So looking at the market, the S&P was up 0.2%. John's weekly HCDs, although they didn't work half the time, but overall they were up 1%, which is far outseeding the market. The IBD 50 was up 1.36. Person's long signals, again, about a 50-50, were up 1.28. The GAF All-Stars were up 1.53. My favorite trade of stocks in a squeeze right below PSAR dot was actually up 1.55. However, the HGS 100 was down a little bit, 0.62, and overall my buys, even though it was more positive than negative, I was actually down 0.34. So, not a big week one way or the other, but underperforming the S&P. There was no Hindenburg signal, and we wouldn't expect one since you pretty much would think you'd be up closer to tops. We are seeing more than 2% new highs. New lows remain less than 2%. Bucketology, a couple stories here. Let me blow this up a little bit. So I always like to look at where we sit in relationship to the stocks in the S&P 1500 in relationship to the upper and lower Bollinger Band. And we see that 2/3 are above the midline, but we really don't have that extended picture. What I'm looking for are things like this, where the pie slice gets very big green, which means we're overly overbought with a lot of stocks outside the Bollinger Band, or the red piece gets big where we're oversold. So I use these to time market tops and market bottoms, and during this bull market, it's been quite effective. The markets, according to the Ian's Woody indicator, a little bit of yellow popping in, but for the most part, the markets remain in an up move, with the last kahunas to the downside back in September of 2015. Seasonality, I want to show you this because this is pretty cool. If you look at the market and you look at the major indexes over the next month, you could see the only places where we lost money would have been the VIX, which means the market goes up, and utilities and Amex were break even, although they were both up more years than down. But you look at something like the NASDAQ 100, the Russell 2000, high percentage of being up over the next 30 days. If I look at leading ETF groups, and again, for the purpose of this discussion, let's really look at the 1 month response. And you could see over the next month, 11 out of 14 years, semis are up 4%. You just don't see a lot. You see, real estate, REITs, construction, broker deals, regional finance, and things that were weak on Friday were down. But technology and somewhat biotech are what lead the market during this period of time. From a stock seasonality perspective, I wanted to show you that there are a number of stocks that have, here's 18 out of 20 years up over the next 30 days for Rockwell Automation for an average return of 9%. Same percentage, so 90%, likely to being up over the last 20 years for Valspar, an average of 8%. Some of the big winners, Sox up 4%, and then Tessera Industries, for example, was up 11 out of 11 years and up 10%. MasterCard, people use their credit cards over the holiday, up 8 out of 9 years for an average return of 8%. So that gives me a nice sense of what the market is doing. Then I usually jump into my trade station, and I've got some great news for my buddies in the PUG group, which I'll hold off for a few seconds. Let's go look. What I did is let's go to what you're used to seeing. Hold on a second. I was speaking at John Person's meeting this week, and I cleaned out a lot of the indicators I used because I didn't want to, frankly, confuse the audience. And so I went relatively gentle on the HGSI indicators, although I did go into HGSI, and which was a bit of a challenge, especially considering that John's indicators are not in HGSI. One thing, just to let you know, China's PMI just came out higher than expected, still less than 50, but 48.3 versus 47.2 in September, and the market got a lot less negative. The S&P futures are now down 3.5, so they cut their losses by 50%. That's nice to see. So for those that are new, and welcome to you, I look at just a couple things on these charts. I look at the color of the paint bar. This is an Alexander Elder paint bar, and he uses it as a filter. When the paint bar is green, he's got permission to go long or hold. When it's red, he would say he's got permission to go short or hold. And when it's blue, you can buy, you can sell, you can hold. I look at the arrows. These are John Person's buy and sell signals, a very valuable signal in my trading armamentum. And I look at these little dots at the top of the bar or at some point at the bottom, and those little dots represent a MACD divergence or appearance of it and tells me I need to look at it. So what do I see? And then I've got daily, weekly, monthly. This thing down here is the high jump. The high jump tells me what percent stretched am I compared to the greatest stretching from the moving averages over the last year. It really, I don't look at it until we're breaking out to new highs or recent highs. So right now the high jump bar is not something that I'm going to pay much attention to. So we start with the NASDAQ. It's blue after being green. It's in a buy signal, getting long in the tooth in this buy signal, close to the upper envelope. That doesn't bother me. Stocks have and indexes have a tendency to just walk up that upper envelope. It's in a buy on the weekly. It's still in a sell on the monthly, although it did turn green on the Elder indicator. That is the NASDAQ. The Dow, similar picture, turned blue, still in a buy, weekly buy. Green paint bar on the monthly, still looks very buyable, although not to say we won't get a little pullback first. Broken record on the S&P, same exact pattern. You want to see what looks different, let's just look at the Russell futures. How does the Russell futures look different? Couple of things. You don't have a green bar on the Russell weekly where you did on the others. It is in a buy, both daily and weekly, with a blue bar on both the daily and weekly. It's still in a sell on the monthly. So the Russell has some work to do, and since a lot of the growth stocks that I like to buy and look at are in the Russell, it would be nice to see the Russell show some life. I guess that's all the major indexes. The SOX, interestingly, despite the strength that it showed on a lot of different things in the seasonality, it did go into a person sell signal this week. So you might have an opportunity to look at some semiconductor stocks after they pull back. And as I think about it, the beginning of the week was pretty rough on the semis, as one of the Apple suppliers had bad numbers. Yet, when Apple came out, the numbers were okay. So the semiconductors still haven't made up what they lost at the beginning of the week. What's interesting is here's a pullback in an uptrend because I've got green paint bars on the weekly and monthly. And on John's indicators, I got a weekly buy signal. Something that I don't talk enough about that I think John really does a great job with is just looking at the impact of OBV on and its impact on predicting where price goes and the advanced decline. Don't have a lot of time tonight, but let's just look at an example as the Qs here. And you could see in the Qs the OBV broke above its moving average here, which is a date on this. Let me open up the little bar here. So really had an improvement here, which was October 1st, and I think we said October 2nd was the bottom of the market, with a buy signal. OBV broke above its moving average, and you could also see at the same time in pink, the advanced decline line broke above both of its moving averages. So this rally has been accompanied by strength and support with volume in the advanced decline line, all of course except not the IWM or the ETF on the Russell, where the advanced decline line and the OBV are both lagging. All right, special late news for puggers. Today at John's meeting was released the scans we've been waiting for. We've been waiting for JP number 3s. Well, we got JP 3s and 4s, two different HCD daily scans, HCD weekly scans, and this was released to attendees. All PUG members will probably be getting some notice from Mary in the next couple of days. There's instructions how to do it. It's pretty simple, very exciting. We'll talk more about that later. Let's take a look at the markets in HGSI. Because of the meeting and not wanting to confuse people, I actually renamed some of my ranking modules. So let's look at the price and volume near term, also known as the T1 indicator. And let's look at Major Markets Plus in Woodward and Brown. Oops. And we can see that oil, gas, so energy up at the top. Interestingly, volatility actually rose 3% at the end of the week. It's still down near its lows, as we'll look at. But weakness in the S&P 100, NASDAQ 100, Biotech, S&P 500. So the week ended on a weak note, which is reflected here. Let's look at some of these charts very quickly. Start with the S&P 500. Now, we know there were no kahunas because we didn't see them on EdgeRater. So I'm not going to spend much time on the webinar view, but I'm going to go just to a simple moving average view. And the hope that we have, that I have, is that we've broken out of this trading range, that we had one box, another box, and then keeping with sort of the Darvis story of boxes, have we entered a new box? And where is this box going to go? And certainly I drew it based upon where we're at, but my hope is that the box takes us higher. But it wouldn't surprise me to see us come back and retest and then ultimately go higher. But often what has been resistance turns into support, and we'll see if that's the case. Let me clear off some of these things. Sure. So our double bottom, breakout above the moving averages. Both the bongos are green, no Hindi signals. Again, wouldn't be surprised to see a retest here, but you got to like the state of the index. Take a look at the Dow Jones Industrial Average, those 30 stocks that everybody follows, almost the same exact picture. Again, a retest would not be surprised, and then a move perhaps on to back towards old highs. Russell 2000. And again, for newbies, the magenta here is an 8-day exponential, then a 17, 50, and 200-day simple moving average. The bongos, we talked about this weekend's meeting. It's just a relatively simple timing mechanism. You notice that before the market took a big heat, the weekly bongo went red and it stayed red. And every time you have a retracement in this downtrend, the daily bongo goes green. When the daily bond goes green, we're in the midst of an uptrend, and when the weekly bond goes green, we're in an uptrend. And when the daily goes red, it's where we see pullbacks. And what I really like is the fact that I could scan for pullbacks in an uptrend by looking for that pattern. So the Russell, clearly the weakest in between the 17 and the 200-day moving average, and the bongo is still negative. Very quickly, let's see, the NASDAQ looks like even better than the Dow and the S&P. Bongos are green. It's well above the 200-day moving average, and that's leading the market right now, and I think really propelled by the NASDAQ 100, although the NASDAQ 100 was weak on Friday. You could see here's the NASDAQ 100. Frankly, getting very close to prior highs, which might be a reason to stall out here and show some resistance, as I talked about in the when I was looking at the canaries. On that note, I'm going to take a quick pause and I'll be back. Okay, I'm back. So we now looked at the major indexes. Let's quickly look at some of the other parts that are important. Start with the dollar. Dollar sitting right on the 200, had a doji. Certainly the dollar could go either way. From a long-term perspective, the dollar is in a downtrend since earlier this year. It's funny, I think, if I think back to March, one of the drivers for not doing rate increases was concern about the strength of the dollar. If things escalate in the Mideast, and I'm being very hypothetical, I have no data, but if things escalate, the dollar is going to become a safe haven, and that is something that can form a headwind for stocks. But that's very hypothetical, and nothing may come out of this Egyptian or the Sinai shooting down of a Russian airliner. If we look at the VIX, the VIX was up 3% on Friday, but, looking at the VIX in a downtrend by both daily and weekly bongos, underneath all the moving averages, the VIX would have a lot of work to do to get above them. But clearly, this is a place or near a place where the VIX likes to bottom, and we'll be looking for a rise of the VIX, which would also signify a challenging time in the market and a time to be careful on the long side. Gold and silver, very much related to the dollar. Since the dollar has been weak, or not weak, but the dollar has been gradually falling over the last several months, you'd expect a gradual increase in gold, and you have the challenges I've talked about several times is this 200-day moving average, which on the way down may have been, sorry about that, let me fix that, great support for the market. The 200-day maintains resistance, and before I'm going to be interested in going long from a big perspective on gold, I'd like to see a couple of things. One, I'd like to see it stay above the 200. This black line, which I put in ages ago, is about 115. And when I put it in, it really looked like it was long-term support on gold. And I'll show you what I'm talking about. Pulled in here in July of 2013, and it really held for some time. It pulled back to it several times in 2014. Again, long-term support. Came back down to it and tested in October, and it broke through that about a year ago. And since it broke through, it has spent most of the time, it had one run up here in January, broke down again in March, and really has been in that region or below for quite some time. So I'd like to see it also get above that line before I'm really convinced that we're out of this mess, what gold has been. Now, that's one way of looking at it. Another way to look at it and say, stop being so stupid. We had a run in gold of 10% in about 2.5 months, and I played that, and I'm sure others played it as well. I'm just looking at the long-term trends, and the long-term trends at this point are not necessarily your friend in gold until we can get above and stay above that 200-day moving average. And looking at silver, similar pattern, 200-day moving average being resistance. All right, so, short term, the Russell worries me a little bit. Short term, I'm expecting retest of that 200-day moving average from above. Hopefully that 200-day moving average will hold, and we'll start to see the markets run up to year end. That's my hope. We'll play the market that we get. Now, I also like to look at momentum and to look at industry groups based upon momentum and looking at a short-term momentum and a long-term momentum. So if I look at a short-term momentum to the upside, 2-day momentum, energy I mentioned was strong, and frankly, exploration, midstream, oil, gas services, integrated oils, and refiners, all the major energy plays made it into the top 12. And then one that in some ways is related to energy, especially the tankers, you can see marine shipping was in 20. Now there's 171 groups, and seeing the energy accumulating here to me is a very meaningful thing. Technology with semiconductor devices, infrastructure, software, computer, hardware, and storage, and then electrical power and equipment rounds out the top 10. So I typically like to look at what's moving in these groups, change index group, and we mentioned today in our live meeting that Marathon Oil is one. And I'm going to switch to my more robust view here, that Marathon Oil was one that John Person had picked up off the bottoms, and I'm in a 14 January call that's had a nice move since I got into it. I bought it probably at the money. And, this is very typical. These are stocks that look like gold that have been in long-term downtrends, have struggled to get above the 200-day moving average. Here we're above the 50, a nice retest here early in the week. These are the PSAR resistance dots. I'd like to see a breakout above that as well. So clearly not a stock breaking out to new highs, but rather a stock that has come nicely off the bottom. S&M Energy, similar story. Having a tough time, I think, staying up above the moving averages here. Pays a little bit of a dividend. Range Resources, not, same story in a downtrend, bouncing off the bottom. Don't like this as much as Marathon. Whiting Petroleum. So these are stocks, and I think Marathon thus far, until I get to Occidental, is the best of the bunch. Occidental is a little bit nicer because it's actually moved up and tested the 200. Looks like it might be failing. That's something to look at. So these are up at the top on the list because they have a fair amount of volume, and these stocks have been moving up in the short term, and I'm looking at a very short-term momentum. But they're not growth stocks breaking out to new highs. I personally own Marathon, and I have a position in Apache. And Apache, you'll see its pattern looks very similar to Marathon, with the low being put back in here, and I think this showed up on one of John's scans as well. All right, not breaking out to new highs, but constructive moves off the bottom. Similar on the midstream plays, clearly not breaking out to new highs. Similar picture of bouncing off the bottom, lower low here. A higher low here. We'll see if we can get another set of higher highs and be moving into an uptrend. But what makes these things kick are dividends, and this is a 6.5% dividend play. It does make money. This is WMB, Williams Companies. Here's ETE, again, similar pattern, higher low. We'll see if it can have a higher high now. Pays a 4.9% dividend. Cheniere is a little bit different, LNG play, a lower low, still in a downtrend, does not pay a dividend. So these stocks have also been moving up to the top of the list on a down week or a week that was flat. You could see these are up 3, 4, 5%. I think what's driving much of these stocks are probably their dividend play and the fact that the energy complex is doing well. Semiconductors, this is a strong time of year for semiconductors. And here's IDTI, which just had blowout earnings and really took off above the 200-day moving average here with the kahuna from a squeeze, and it hasn't looked back since, getting a little long in the tooth from my perspective. PMC Sierra, I believe this is one that's one company put a bid in it. Second company said they're interested, and therefore you have two areas that look like potential takeout prices. Cypress is interesting to me. It's certainly a laggard compared to IDTI. Earnings are up and down, but they seem to be improving. Pays a 4.2% dividend. Revenue growth is picking up dramatically. Here's the group strength, this hard gray line. Earnings are already out, and on Friday it moved up nicely with a kahuna and a 6% move. This is one that we'll look at in the person indicator set that I like to use. Now, when I'm doing this for myself and not doing it as part of a program, I'm basically putting these into a watch list, and from that watch list, I'll pick the stocks that I want to play this week. I'm pointing out Tesra, TSRA, for a simple reason. This is a stock whose earnings are due this week, November 3rd. It is a stock that has had great seasonality in this quarter, and you could see up 11 out of 11 years, average return of 10%. It's sort of got a double bottom period over here, moved up above the 50. I worry about it stalling out at the 200. This is one I might watch earnings and consider playing for the seasonality if it doesn't run away too much with earnings this week. Infrastructure software, these are a lot of the stocks that are involved in network security. Don't know much about Imperva itself. Pulled back to the 200, bounced, and had a valuable gap up on Friday. Don't like the earnings per shares growth. It's a small revenue company, 600,000 shares, no dividend. Nice uptrend, pull back to support and a breakout, but a little bit loose for my taste. Palo Alto Networks has been the big kahuna in this group. If I drop it to a weekly picture, one could see just a massive move from November 13 until this summer. It's corrected from about 200 down to about 155, bounced off the 50 weekly moving average. If this stock's going to participate in a rally into year end, this is a place where you might expect it to start. Don't like all the red up here in the mobile breakdown from a squeeze, so I'm not jumping on this. But in this group, this is one of my favorite charts. Proof Point is another one of these. Network Security, again, you see the lack of earnings, bouncing off the 200 and starting to make a move up to threaten prior highs. That's a nice chart as well. So I typically go through the top 10 in these lists each time. Computer hardware and storage, Cray must have had earnings. If you look at the chart, you'll see why. A big breakout, Bible gap up. Now, interestingly, some of the voodoo signals that I look at, jokingly I call them voodoo. Here's a mobile breakout, a squeeze at a kahuna, and breaking above the 8-day exponential 2 days before the big move up. So there was a lot of evidence that this was coming. Look at the earnings per share that came into the stock this quarter and what's anticipated. Actually, it must be around this quarter, so the last 2 quarters. I wonder if they beat and raised. So let's look more info from the web, and let's look at FinViz. And what do we see? After earnings beat and outlook, so earnings beat and a raise. That's the kind of thing that really, triple play from Bespoke, they call it, is when an earnings revenue beat and then there's a raise in the next quarter. I suspect that Cray was a triple play. So these stocks are all being put, or were put into a watch list, and then I'll show you what I do with them. Internet-based security, internet travel stocks have been doing well. There's been a little bit of M&A. A Bible gap up on Expedia on Friday. Again, next earnings are February, so I suspect that was on earnings, but let's look at this. Was it earnings, or did somebody put in some kind of a bid? I think somebody was buying shares in somebody else. Strong travel trends. Taxes. Raises full year guidance. Yeah, raising guidance is a big thing, and exceeding profit estimate on the day before. So this is based upon earnings. Don't like the way this candle ended. I'm not going to talk much about VPA. I'm going to leave that in Ron's world. Kind of like Wayne's world, but for grown-ups and excellent stock traders. But you could see this candlestick has a blue box above it. And when I see a candlestick that, the wick is so much higher, it's sort of a shooting star, I get nervous that this might be a stopping signal. But this stock is strong, and perhaps the right thing to do with something like this might be just to let it come in before you start to worry about nibbling. It had been in a very nice uptrend. It's just extended now, and the high jump coming up to the top. C-Trip, this is one where I think there was some share crossover between them and Priceline. Big move up early in the week. And then the big daddy of the group, Priceline, gapped up, earnings in a week. The stock has just been a great player. The challenge here is options are expensive, both because of the IV going up, going into earnings, the price of the stock, and sometimes it's hard to play unless you've got a really big budget. But Priceline, obviously a leader as well. Electrical power, don't know much about this group, except that there were a couple that made the list. Now, this is a very common pattern that I saw. In fact, my stock pick of the week, which is not in this category, has the same pattern. And I'm interested because I think the market's put in a bottom. I think the market's going to go higher from here. And except for the fact that we might see people selling because of tax losses, and I have to wonder if that's going to come before or after the end of the year. But I look at something like Eaton Corp. It pays a nice dividend, 3.9, and what I like about it is it seemed to have, could I see a neck, a head, head and neck pattern. Shoulder, head, shoulder. Draw my line across here, and I broke out of an inverse head and neck. I think so. I mean, that might be what I'm seeing here. I like the group strength. I like the pocket pivot, out of a squeeze. Everything is green in a kahuna. So Eaton was one that excited me for this weekend. Generac looks similar. I like Eaton more. Let's see where we're at. So I typically, every night, go through these top 10 groups. Oil, gas, services. You know, remember the other energy stocks I showed you. You're going to see stocks that are near the bottom, have bounced, lots of resistance above them, but they moved up on the week. And remember, the market itself was relatively flat compared to the prior weeks. National NOV, Rig's got some issues where they've suspended their dividend, which may actually paradoxically be good for the company because it'll allow them to spend the money on operating and not take debt to pay a dividend. You can see all these have had dramatic reductions in earnings per share growth. Are they done going down? Is it time to get into Rig? This once was a high flyer. And let's actually look at a monthly chart. And the pattern that I like to talk about of running up and coming down, this one does it all the time. This one's been down for quite some time. It's below where it bounced the last 2 times over the last 15 years where it's dropped to. Rig is something that maybe this is the beginning of the bounce. Personally, I like to see it get above the 200 and take out its PSAR dots. But this is a group, Noble Corporation, another one where looks like the expiration stocks, doesn't it? Where it's had a higher low, and we'll see if we can get a higher high. Going to run up to resistance here at the 200. So the services stocks, all the energy stocks are in downtrends over some period of time, but on the short term, several of them look like they're turning around. Auto parts companies, I just don't get these, but you look at the big ones, frankly. The stores, which is not this list, the AutoZones, the AAP, just amazing. And they're selling a lot of these guys' products as well as the new car boom that we're seeing. Gentherm makes air-conditioned seats. At one point, this was quite the growth stock. With a major move up here, as you can see, the weekly from 12 to 14, a 2-year period of time. It's been going sideways since that run-up and looks to me like it might be getting interested in running again. Kahuna, pocket pivots, mobile breakout from a squeeze, a Bible gap up on Friday. And my guess is if I look at more info from the web, we're going to see it had earnings come out like some of the others that have had a big move. 4:05 p.m. on Thursday and moved up on Friday. Harman International, they put radios in the new cars. Johnson Controls. Delphi pulling back. American Axle. I look at these stocks and, this one maybe looks a little bit better, but most of them are below the 200-day moving average. The fact that we're not seeing a lot of great chart patterns. So here's one that's pretty good. Standard Motor Products. It's already too extended. The high jumps maxed out. It took out back here. Mobile breakout of a squeeze with some kahunas. It's interesting. Let's just look at this list. A lot of energy stocks that are beaten up, coming off their bottoms. The technology stocks have pulled back to support after a big rise. And then these auto parts are also stocks that are have been beaten up of late. Not what you see as a explosive growth-oriented market with leaders, but perhaps signifying some kind of change perhaps in who's going to lead going forward. 2-day momentum to the downside out of curiosity. Banks, generic pharma, rail freight, healthcare facilities. So interestingly, over the last month, you can go to a 5-day momentum up and down. Over the last month, healthcare has been very strong. Oil looks good over 5 days. You can see specialty pharma over a 5-day momentum window, as well as biotech made it to the winners list. And the 5-day momentum to the downside, banks. banks, and we can look at a couple of different things. If I look at, take a look at the KRE. Something that we learned from John this weekend, John Person, was how so many of the regional banks are in the Russell, and part of the reason for the Russell 2000 weakness might be that these banks ran up quite a bit in anticipation of the Fed. We won't look at that low. Let's just look at the low here, the October 2nd low to the high post-Fed, and the banks were up 13% in 19 trading days. The fact that interest rates did not go up, the fact that there's no raise until December at the earliest, sort of punished these. But if you look at them, compare these to the energy stocks and some of the stocks we looked at in the, quote, winners list, and we could see, although there's a short-term negativity in these are stocks above their moving averages that are in longer uptrends. And we might expect or look for KRE to lead. How about KBD? That's not right. KBE. Or the big banks, a similar pattern pulling back to support. Big difference between being above that 200 where I'm pulling back to support versus underneath where I'm dealing with resistance. All right. I like to do a couple of specific scans, and one of the scans I look for is stocks in an uptrend, pull back to their 50-day moving average, and have some momentum come in for them. This is my favorite scan in HGSI. Got to scan all stocks so I can see them. And there's a couple in here that looked interesting. Herbalife is one that we'll look at when we get into John's stuff. And then I like to look at stocks where the PSAR is close to reversing. And I sort of call these my get on a plane trades, because these are stocks that's very easy for me to trade these before I get on an airplane, because the stock price is very close to the PSAR reversal dot, and I can set my buy stop right above that dot, which gives me an objective place to buy. And at the same time, I can, since it's in a squeeze, it's probable that it's not extended, and I can find an easy place to put a stop. Not saying I would buy Avon, but just to give you an example, this is one that I looked at earlier for my chart of the week, didn't get it. So we have a stock that looks like it should be an oil stock. It's been in a long-term downtrend. Is this a head and shoulders reverse pattern? Put your neck. I'm beginning to think that beauty's in the eye of the beholder. And there's a lot of these things that people tell me are head and shoulders. I don't see them. Here I am telling you what could be a head and shoulders. But I think the reality is we had a higher low here. We have to get above this high to have a higher high, but are we seeing a bottom in Avon? Now I want you to look at the last price bar. And let me show you why this type of a stock excites me, especially since I still have a life and I still work and I still travel and I'm not at my computer 24/7. Let's say that I was interested in buying Avon. I'm not really interested in buying it. It's a $4 stock. It's been in a horrendous downtrend. This is the consumer products industry group, and you could see that it's very strong. All my indicators up here are green. It's coming out of a squeeze and had a kahuna 2 days ago. What I like about this pattern, if it was a appropriate stock for me to buy, is that the price here closed at $4.14. The high was $4. Oops, let me make sure I hit the right day. It closed at $4.03. The high was $4.05, and the PSAR dot is at $4.06. I could put a buy stop at $4.07, and I know a couple of things. I know that if the market is down 300 points at the open because of new hostilities in the Mideast, I'm not encouraging that, by the way, the market's going to trade down. I'm not going to get filled. I know that there are people that follow the Wells-Wilder PSAR reversal trading system, and when you cross above that PSAR dot, it will revert to a green dot underneath and become support, and that there are some people who will take the trade just because they trade that system. And I also know that even if I'm not there watching, that is a place that I can be comfortable taking the trade. Where would I put my stop? it's a cheap stock, and this is why I wouldn't take it. I'd probably consider my stop down at the low of this day, and this is why I wouldn't take the trade, because that's 325. If the stop is at 325 and my buy stop's at 407, that means I'm putting about 83 cents or 93 cents at 83 cents at risk on a $4 stock. That's crazy. So I'd have to have a very tight stop, perhaps underneath, right below that 8-day exponential. And for me, that's not a reasonable stop at 20%. And I would pass on this trade. But what I like about this trade, and we'll see this again later today, is I like finding stocks that are squeezing, meaning they're building up volatility, they're contracting their volatility, they have a tendency to explode, don't know if it's up or down, about to blow through its PSAR dot, so it has not broken out yet. And with this specific pattern, I often see it as a precursor to a nice breakout. So, let's move into TradeStation. So in TradeStation, I have this window here, which is my screener. Well, first thing, I mentioned something new for the puggers. These are John's new scans, and I will work with Mary tomorrow when I'm there to see if I can't put them in your Dropbox with directions. We now have the, just go through them, a buy one for those that have this. It's a daily buy when the weekly's in buy mode. So if I look at one like Expedia, that we'll look at Eaton. We like this Eaton. On Eaton, I see a new buy, daily buy. It's in a weekly buy. OBV is moving up on both. Eaton looks kind of interesting here. That's a buy one. A buy two would be a daily buy signal near pivot support when the weekly is in the buy mode. So if we were to find one of those, that would be exciting, because not only would we have this pattern, we'd be right at support, not broken out too far yet. A buy three is a daily buy signal, not filtered. And a buy four, let me get this right, these are different. A buy three is that daily buy signal near pivot support area. So this doesn't require you to have a weekly buy, so the gap is in a weekly sell, although, okay, but it had a high closed doji and a daily buy at monthly pivot support. So I'd rather have one or buy one of these stocks that has a weekly buy as well, but I have to admit gap is something that intrigued me and I'll be looking at. The high closed doji scans, these are John's famous and probably most accurate pattern. We have two of them now. The second one requires that the stock be in a weekly buy, so it gives you a filter. So you get a high closed doji on the daily, which is this orange bar, while the stock's in a weekly buy. This is Netflix. This is one of my best holdings right now. Big move off the bottom, or off the 95 range. Despite earnings where it sold off, it came down, tested down here, and had a buy signal. You see OBV's moved up. And on the weekly, OBV is threatening to break out to a recent high. And even on the monthly, the OBV is strong. So you have the same collection of HCDs, LCDs, and sell signals on the downside. So this will be coming out to puggers and other lifetime owners. This is where I make my money, is in the scanner. So I put together a list of stocks, and I think they're sitting in the screener. So here's some of my favorite stocks from my scans from this week. And I'll go one at a time. Cardinal Health, love this company. They bought one of my businesses. The good news is I'm in a daily and a weekly buy. OBV is breaking out to new highs. Hopefully price will follow. Above on the daily as well. High closed doji on the weekly. Very impressive looking chart. I'm not taking this trade. Earnings come out Monday morning. It also looks like we've run up to resistance here on the monthly pivot resistance, and I'd like to see it break above this. Earnings should be telling. I told you I like Cypress Semiconductor. Again, OBV breaking out above moving average, strong on the daily buy, weekly buy. Everything here looks supportive. and this is one of the stocks that's on my short list for this week. You'll notice down here are a couple of dots. I've taken the bongo that we use in HGSI and I've coded for it in TradeStation, and this tells me that I'm in a daily and a weekly green bongo, monthly red, which tells me that I'm in an uptrend on the daily and weekly and a downtrend on the monthly. Greenbrier we'll come back to, hint, hint. The gap, I think the gap is setting up. It had a high closed doji on Friday, sort of pulled back to monthly pivot support where it had the high closed doji. My only concern is, despite it being a daily buy, it's still in a weekly sell, so I'm not ready to pull the trigger. Ingram Micro is a stock that looks like it broke out on Friday with a high closed doji and a buy signal. I like the volume. Down here, this is a mobile breakout, a pocket pivot, a mobile breakout. It's in a squeeze, a PSAR converted on Friday, and it's got a kahuna force. Look at the volume here. Ingram Micro looks good. We talked about refiners and oil plays. Here's Phillips 66, PSX. Looks a little bit better than some of the others. The OBV is very supportive, breaking out. Must have had earnings or something. AMX is a telecommunications stock, I believe, in South America. Why did I like this? High closed doji on the weekly and daily buy signals. OBV above moving average on daily, not quite on the weekly. Also in a squeeze with a mobile breakout, PSAR reversal, and a kahuna force. Hard for me to believe I'm talking about Angie's List, but Angie's List looks like it's changed its feathers and breaking out towards recent highs. Buy on the monthly, weekly, and on the daily far to the left. Major move in OBV. Looks too far gone for me, but I was impressed with its OBV. Pinnacle Foods. In a squeeze with a mobile breakout and a PSAR reversal last week. A high closed doji on the weekly, which to me is more powerful than on a daily, with a buy signal on Friday, a buy signal already on the daily. OBV looks good. This looks interesting as well. Two pharmaceuticals that made my list, AMPE. This is a stock that's got amazing on-balance volume in both the daily, weekly, high closed doji. This is a stock that's been in a fairly ferocious pullback. Well, I'm not sure ferocious is the right word, but this is a stock that's been pulling back from the 10 range down to 3.5. That's pretty ferocious. But it is moving up. Sucampo is another specialty pharmacy stock that has been pulling back. Why did it make my scans? It's in a daily PPS buy, a high closed doji, which is something I like, and OBV is very strong coming out of a squeeze. I'm getting tired, so let me show you a couple of my other favorites. Tour. This is, I don't know anything about the company except we've pulled back on the monthly with a high closed doji on the monthly, a high closed doji on the weekly, OBV strong on both, OBV great on the daily. Daily buy, weekly buy, a lot to like here. It's already run a little bit, which would be my only concern. It's run from 13 up to 15.5, which doesn't sound like much, but it's probably close to 20%. These here are not necessarily buys. This VRX is probably the opposite of a buy. This is why you don't get married to your positions. I had to take profits on mine. I had costs of about 50. It had a ledge drop from 240 down to this ledge about 180. And if you were holding any shares, this PPS sell signal at in the 170 range would have been your last time to get out, along with a low closed doji. So this is how I look. I build a watch list. This was the watch list this week, 300 stocks here. This made some of my cuts. I looked at every one with John's indicators, supplemented them with the indicators that I've been using for years in HGSI and that are part of my trading acumen. And then I come to a list that I'm interested in, and these are things we added up during the meeting. So let me kill that. Then I pick one, and that's the one I'm going to try and trade on Monday. I may trade some of the others. So let's go back to, let's take a look at Greenbrier. First, let's look at an HGSI. Start with a weekly. this is a stock that has had its ups and downs, and it had a major up 9/13 until 9/14 for about a year. And its big up move was associated with the fracking industry and the fact that you had to build and refurbish rail cars for transportation of oil. Ever since oil's come under an assault, or fracking has come under an assault, just like the fracking companies themselves, you can see a sell-off whether you look at trains. You can also see it in Greenbrier. Greenbrier also had a pretty high-profile earnings miss, I think, back in the summertime. I look at the weekly chart, and after a huge run-up, it certainly looks to me like Greenbrier in the weekly chart has found a place to start to reverse from, that 200-day weekly average. Then, if you look at the daily, switch to the daily chart, and this is another chart in its group, RCII, which I believe on, is it ARII, I'm sorry, ARII, which broke out this past week. And if I go to more info from Web to see if it's something that might be meaningful, what do I find? Quarterly profit rises 23%. Stock traded up 10 to 15%. Tank car rally after oil rout. So now this stock's already broken out. Greenbrier's earnings are out. It beat earnings. It raised its dividend. And here's one of those stocks that I like that's sitting right below the PSAR dot. So I'm probably imagining it, but sort of shoulder, head, shoulder. I mean, again, sometimes I think head and shoulders, inverse head and shoulders are voodoo. Maybe I could do a neckline around here, and we got a breakout above that neckline. I know I'm imagining things, but that's what chart pattern is to me. It's almost imagining and looking at something. Even without that, what I see is a stock that is pulled back, bottomed in September, higher low here, breaking above its moving averages, a long way to go into the 200-day moving average, makes money with some big earnings coming in. And this was the earnings that were just announced. This is the next quarter, which isn't until January 16, right below the PSAR dot. Here's why I like this stock, and we'll go look at it further in a second. I could make a green dot and say, I want to buy this stock when it crosses above that PSAR dot. I'm going to put my stop a little bit deeper than I would want. Probably put my stop right around here. And I'm going to put my target in this range here. Now, math-wise, I'd figure out the distance between these two, add it to my buy stop, and I would set my profit goal in that area. And so why I like this trade is I have a defined stop. The stock may be setting up for a new uptrend, pocket pivot and kahuna on Friday, mobile breakout from a squeeze. And if I go look at Greenbrier now in TradeStation, I see some of my favorite things. I see a high close doji on the daily. OBV looks strong. I see a Bible gap up, pocket pivot, a mobile breakout, a PSAR reversal. A squeeze. I'm waiting on the PSAR reversal, and a kahuna force. Not too bad. And a buy signal came in on Friday. If I look at the weekly, I see OBV breaking out. I'm on a buy signal. It's been in a downtrend, so my weekly and my monthly bongos are red. So is this the beginning of a change in its colors? Don't know, but I might be willing to make a bet. So here's my bet. Again, charts of the week are for demonstration purposes only, so you can see my thought processes around taking a trade. I do plan on taking the trades that they execute, and I'm not doing this to provide stock tips, but to openly discuss my thoughts. I don't warrant these trades. I don't suggest that you take these trades, but I'm trying to show you how I make a decision. So this is what we talked about, breaking above the 50. A pocket pivot, a kahuna, a Mobo breakout from a squeeze. My only concern is that this weekly bongo, which has been very helpful in keeping you out of the stock throughout this entire downtrend, either this is just a retracement in a downtrend, which is possible, or perhaps we're starting to have a move. So I'm willing to take that risk. In TradeStation, we looked at it already. So I got PPS daily and weekly. OBV is strong, both daily and weekly. I'm not going to talk much about this, but the histogram is rising while price is dropping. That's bullish convergence. If a market's stable, I've put my buy point, my target, and my stop, and I can buy about 400 shares for every 2,000 I'm willing to lose. Note, actually, I think this was 1030. I want to fix this because it's going to stay out there. So let me go back to HGSI. Actually, yeah. I don't want to put misinformation out there. FinViz. More info from Web. FinViz. 1030. Beat and raise. So let me go back to my slide and fix the slide. And on that note, yeah, that was old. I don't know what that's doing here. Just want to mention my Pug trading group. It's open to any person that has John Person's lifetime indicators for TradeStation. It's a way to bridge what I do in HGSI and TradeStation. John participates as well. There's no cost to participate. You need to be an owner of both programs. Next week, I should be home to do this again. Be careful, at least beginning of the week. I am, concern's a big word. This market's moved up a lot. I'm very happy. I'm bullish, intermediate, but it wouldn't shock me to see the market pull back a little bit at the beginning of the week. We've had a number of positive weeks in a row. I hate saying we're due, but with some of the turmoil in the Middle East and being that we might want to retest the 200s before we go higher, that's what I'm looking for. Good night, everybody. Thank you.